In the latest unionization effort by a major U.S. corporation, employees at a number of Apple stores are preparing to unionize, the Washington Post reported Friday. The paper, citing sources familiar with the matter, said that employee groups at least 2 Apple stores are backed by major national unions and are preparing to file paperwork with the National Labor Relations Board in the near future, and that at least 6 more locations are at less advanced stages in the unionization process. The move follows unionization efforts at other large U.S. retailers, including by Amazon warehouse workers and Starbucks staffers. Apple has 270 stores in the U.S. and made 36% of its more than $365 billion in net sales in fiscal 2021 through its retail stores and website, according to a regulatory filing. CEO Tim Cook's pay last year was 1,447 times that of the average employee at the tech giant, fueled by stock awards that helped him earn a total of nearly $100 million. Apple and the National Labor Relations Board did not immediately respond to Reuters' requests for comment.
Only days ago, French President Emmanuel Macron was promising a nuclear renaissance. He said the country would build 6 new end plants to help meet a goal of carbon neutrality. But the industry might first need some help to stay in business. The French government said Friday that it will boost power firm EDF with about €2.1 billion. That's close to $2.4 billion. The fund injection is to ease the financial pain of reactors going offline. EDF has been hit by technical problems that will require it to shut down most of its nuclear plants for checks and maintenance. On Friday, it said that would cut this year's core earnings by around $12.5 billion. And that's not its only problem. Paris is also forcing EDF to sell power at below-market prices to soften the impact of soaring energy costs on consumers. The firm says that will knock another $9 billion or so off its earnings. Now the new funds should plug short-term gaps in EDF's balance sheet. Chief Executive Jean-Bernard Lévy says wider reforms to secure the firm's future may have to wait until after this year's presidential and parliamentary elections in France.
Renault swung back into profit last year, reversing 2 straight years of losses. The French carmaker reported Friday a group share of net profit of $1 billion, well above analyst projections. Its operating margin of 3.6% was above the automaker's own targets. It also put Renault 2 years ahead of its so-called Renaulution revitalisation plan. The results come after the start of a big restructuring to lower fixed costs. The company also refocused on its most profitable car models and markets. Renault put the successes down to the firm's strategy of value over volumes and strict financial discipline. The strong performance means Renault now plans to repay state aid received during the health crisis ahead of schedule. Renault had already repaid around a quarter of the $4.5 billion in loans it received. It now plans to repay the rest ahead of the 2024 deadline. Renault also confirmed that EVs are the future for the company. It wants the brand to be fully electric by 2030.
Wall Street's main stock indexes ended lower on Friday as escalating tensions in Ukraine and U.S. statements of an imminent Russian invasion prompted investors to dump risky assets in the run-up to a long weekend. The Dow fell 0.7%. The S&P 500 also shed 0.7%, while the Nasdaq dropped 1.2%, dragged down by declines in high-growth stocks including Apple, Amazon, and Tesla. George Ball is chairman of wealth manager Sanders Morris Harris.
Stocks are slumping for 3 reasons. One, the best indicator of where the market's going to go on any given day is what it did the day before. It works more often than not. Not a good reason. Second, if you're a trader or even an investor, you don't really want to be long a lot of stocks over a 3-day weekend when you've got the threat of a shooting war starting and nobody knows whether it'll start, when it'll start, or how far it'll spiral. Third, there right now is something of a bear tilt to the market. speculators are frightened by what the Fed may do. Investors are frightened by the possibility that Fed moves and inflation could cause a recession later this year. So you sort of got a unholy threesome of factors that are weighing on the market.
Intel tumbled after the chipmaker forecast its profit margin to drop this year and then be steady for several years as it invests in new technologies and factories to meet rising chip demand. Roku also slumped after the streaming platform's disappointing quarterly revenue and first quarter outlook. And DraftKings fell after the sports betting company forecast a bigger than anticipated 2022 loss. Friday marked the second straight week of declines for Wall Street's main indexes.